The S&P 500 and the Dow edged higher on Wednesday after inline consumer price inflation data kept the US Federal Reserve on track to deliver another interest rate cut in December. So joining me live for more on this is independent analyst Evan Lucas. Evan, good to see you again. So what does this inflation data drop out of the US tell us, and what could it mean for us?
Yeah, morning, Kenny. Look, I think it's a fascinating piece of data because it came in line. In fact, there's an argument that it's probably now getting to a point in the US where inflation, like here in Australia, is starting to flatline out. It is at a better rate. It is sitting at 2.6%. Headline inflation sitting at 2.8%. So it's lower than what we have here. But for the last 3 months in a row, it hasn't moved. It's actually held about 0.8% above where they need it, which is 2%. But, and you pointed to it already, the US markets reacted really positively to it. In fact, they actually now predict an 80% assurity that the Fed will cut rates again in their December meeting after cutting rates last week at the back end of the US election. So that means that by the end of this year, a full 1% will have come out of the US Federal Reserve's equivalent cash rate, which is called the federal funds rate. And that would be the lowest we've seen since 2021. So it's happening. But again, like we're seeing here, what we need to take out of this, it's slow. It's very, very sticky. And they, even with rate cuts, are not seeing a level of stimulus that's actually expected to see inflation take off. The question will be obviously around the Trump administration. That is where we'll be watching in 2025.
Yeah, and all eyes will be on labour market figures as job creation keeps defying expectations today.
Mm-hmm. They do. And again, it's actually not necessarily around the unemployment rate, although we'll hear lots about it. It's likely to stay at 4.1%. It's again around the participation. Australia has never had as many people employed as it does right now. And the amount of people that are actually in the employment market has never been greater, particularly women. And that, I think, is what we're going to be watching today. 62.8% of those women that can participate in the workforce were there last month. It's expected to jump to 63%. And men is now supposed to be at 69. And so all of that is why unemployment is growing, but it's because more and more people are actually engaged with the overall market. So another 30,000 jobs expected to be added in October. It's why we're also in an interesting conundrum. More and more people are getting work, which means it's hard to cut rates when we've got an economy that is still absorbing slack in the overall employment market.